Hi, I'm Klaas Fleischmann and I welcome you to New Business Models Tutorial 3.1, Value Capturing Part 2. This tutorial is specifically designed to give you an understanding of the revenue streams building block in the business model canvas. But first, where are we now? You have a thorough understanding of the business model canvas and its building blocks, the lean canvas and its 4 different building blocks, the different elements in the lean canvas, such as high-level concept, unfair advantage, alternatives. But first and foremost, you should be able to understand and explain the cost structure in the business model canvas. Let's have a better look at cost and revenue once more. The difference between cost and revenue determine the gross margin. The net selling price of a product minus the cost of the product sold. So what costs your product and what do you charge for it? Total revenue, volumes sold, times unit price, and the profit is total revenue minus total cost. So at the end of this tutorial, you'll be able to establish if your business model actually can make a profit. Let's first have a look at revenue streams. Revenue stream represents the way your company generates money from each customer segment. The right questions to be asked on this building block are: how are customers paying for the value proposition benefits right now? What are their preferable pricing schemes? What mode of payment would be preferable to them? How much does your revenue stream contribute to the overall revenue? And are there any switching costs? So how easily would they transfer to another solution? So once again, revenue streams, the revenue a company generates from each customer segment. Again, we try to establish if the business model could generate a gross margin, so a positive difference between the selling price and the cost of the product sold. We distinguish between 2 types of revenue streams. First, the transactional revenue, one-time only revenue, for example, going to a store, buy a book and pay for it and leave, or recurring revenue. So your subscription for your smartphone, for Vodafone, for example. In your analysis of the revenue stream building block, you also need to address 12 possible ways to capture value, next to the types that we just described. The first one is asset sale. Asset sale, the sale of a car, for example. The second one is the usage fee. After the COVID-19 situation, hopefully we'll be allowed to go back to the hairdresser. We will be paying for the time that we use from the hairdresser in a so-called usage fee. Telecom providers usually charge you on a subscription basis. Lending, renting and leasing. Some organizations provide their customers with exclusive rights to their product for a limited amount of time for a set fee. Technology patents, trademarks, copyright and trade secrets are usually called intellectual property and could be licensed out to other companies and therefore could create a revenue stream. Real estate agents or headhunters usually ask for their intermediary services for a brokerage fee. For startup companies, advertising usually doesn't provide a very stable revenue stream in the value capturing part because advertising revenue is very unstable, as we can see right now in the COVID-19 crisis. Besides, Google and other big companies take a large amount of that advertising revenue within their business models. Zoomas, our example in these tutorials, is using a freemium premium model to actually make customers go from a free use of the service to paid use or professional usage. You all are familiar with these small payments in your PlayStation games. We call them micropayments. Companies offer their product for free. Once customer is using it, they can make small payments in exchange for features in your games, for example. Affiliate revenue is revenue from websites that refer from their website to another website in order to get sales going. Commission-based. Some bands ask you to pay for what you like. For example, Radiohead's latest album. They launched digital and you paid what you liked. And finally, crowdfunding. When I launched my first book, I used the GoFundMe crowdfunding website to get more funding for the platform and the toolkit that I wanted to create together with the book. And finally, we distinguish between 8 pricing schemes. List pricing, restaurant, product feature pricing, if you buy a car and order additional features to it, customer segment pricing, like student discounts, and volume pricing. The more you buy, the more discount you get. These are all fixed pricing schemes. Then there are variable pricing schemes, mostly used in business to business, negotiation or bargaining, procurement in large industries of large resources, auctions, for example in flowers, and real-time dynamic pricing, and airlines. I don't know, maybe you're using the Skyscanner app. Let's go back to our Zoom as example one more time to investigate the revenue stream building block. As you can see, I'm back on the Strategizer platform. Looking at the revenue stream building block, you can see that I already created a couple of new sticky notes. An enterprise sticky note, a professional user sticky note, a yellow sticky note for the analysis, and 3 different sticky notes that relate to the other customer segments. You also can see there are some numbers here as well. Now, how did I find that information that is important for the revenue stream building block? First of all, I went to the Zuma's website and looked for the pricing plan overview. Sometimes this is also called costs, but make no mistakes, in the business model canvas, costs are part of the cost structure, and pricing schemes is part of the revenue streams. As you can see, it's a list pricing scheme, and it's a freemium premium model. However, I'm not sure if Strategizer gives a freemium premium model. Maybe it's being called subscription. You could also say it's a subscription per month. Also, it's interesting to see that enterprises at least have 100,000 participants per enterprise. Obviously, I want to know what the share is of the different usage categories to the overall revenue, and therefore I tried to Google more, and I arrived at a prospectus for an initial public offering of Zuma's, and the only information I could find there, and I looked very, very hard, is that 30% of revenue comes from enterprises, and that those enterprises are 344 customers. So that's interesting information. Remember that the revenue in 2020 was roughly $622 million US. So 1/3 of that $622 million comes from enterprises. So keep that in mind. So let's try to use that information to put on the platform. So first, starting with enterprises. Enterprise connects to the segment of enterprises, of course. There's alignment, and it's aligned with the value proposition as well. Clicking on it. I selected subscription, as there's no premium available. I connected it to the value proposition that is applicable here: easy, reliable, innovative video conferencing. I know that the revenue from enterprise is 30% of the revenue. They pay $19 a month, and I assumed that because we have 344 enterprise customers, that the amount of users for these 344 customers must be roughly 3.5 million users. For we need to arrive at roughly 1/3 of the revenue deriving from enterprises. So that's the first segment. Closing this down, going to the professional segment, same thing. Subscription, same value proposition, only it's $14 a month subscription fee. It's roughly 70% of the business because I don't know the difference in tech, government, and business. So I just said, okay, 70% is part of the professional users. And I roughly assume that 2 million users are professional users. So 1/3 of the revenue comes from professional as well. So we arrive at $235 million US roughly. That basically means that the value capturing of this business model is far from perfect. We're still making a loss. Basically, that means to arrive at a profitable business model, tech, government, and business should at least offer $139 million. Well, based on the COVID-19 situation, you can also assume that the professional segment has increased considerably, and therefore the company is making a huge profit at the moment. But just looking at the information that I just received, I basically see that the net estimate, which is the final analysis of this business model, is still negative, as you can see up here. Now, finally, we want to give an analysis of this particular building block. Looking at the theory that I just shared with you, it's a recurring revenue stream, freemium, pay-per-use or subscription. I rather changed this into subscription, of course. Made a mistake here. Paste. They use list pricing. However, I guess if it's an enterprise client, they will have a personal relationship as well, and there will be negotiable pricing as well. So this concludes the revenue stream building block and the analysis of the value capturing part. Obviously, in your assignments, if you have the information, you should arrive at a positive net estimate, because otherwise the business model would not be viable. In my analysis, I still have to look further, but I don't have time for that, to find the revenue for government businesses and tech companies to finalize the value capturing potential of this business model. The numbers up here, finally, just represent, based on what I filled in here, the number of users in those particular segments, and it should showcase the importance of the different segments in your analysis as well. Well, by now you should understand the definition of a revenue stream. You should be able to analyze if the revenue stream is recurring revenue or transactional revenue. You are familiar with the 12 ways to capture value and the 8 main pricing schemes. And finally, you know how to apply this theory to a real business model canvas. If there are any questions, please, again, do not hesitate to ask them in your online sessions later this week. And this tutorial concludes the overview of the business model canvas building blocks. I thank you for your attention, and good luck in designing your business models, and good luck in finalizing your assignments. Bye. Good luck.